Welcome to this episode of Money Matters TV. I'm Kelly Stewart of The Positive Business, and I'm so excited about our show today. This is our first show where I will be co-hosting with Josh Irons of River Avenue Digital, and he's made a valiant effort to be on the show with us today. And our guest today is Gary Golden, CEO of BHCU Credit Union, and we'll be talking with him soon. In the meantime, Josh, hi, how are you?
Great. What a great surprise it is, Kelly, that we get
This is a
to be
wonderful
together.
surprise.
Yeah.
Absolutely. I'm so excited. And, not only because I know of you and your work and your expertise, and we've had an opportunity to have a lot of great conversations, but we share something in common, and that is a love of marketing and branding as well. So I'm super excited to talk to you about that today. Money matters, your brand matters, it's all important. So what's going on in the world of branding?
It seems like during the pandemic, we've gotten a lot of phone calls from individuals, businesses out there that are saying, you know what, now's probably a good time to rebrand. We've been thinking about it for a while, and maybe things were slow for that company, or they just saw an opportunity to take advantage of some new business opportunities and said, you know what, let's put the pedal to the metal and get this thing done. And one of our favorite things to do at River Avenue Digital is to help people and businesses with their brands. So it's been an exciting time for us.
Right. Well, I think you hit the nail on the head there. Reinvention, rebranding. I think it's given a lot of organizations pause to, the pandemic has, to take a step back and say, reevaluate, who are we? What are our values? Maybe they have changed a lot, maybe they haven't, but how do you bring that message out into the world? Are there certain trends that you're seeing, whether that's in terms of the look and the imagery that's being used? Is there anything that's kind of coming to mind there?
Nothing specific. I mean, it's a situation that goes brand by brand, and there are businesses that said, you know what, we really have to reinvent ourselves. And maybe they took their business online, maybe they took their business to another type of sales opportunity that they had. And it was a great opportunity for them to say, hey, you know what, let's do what we want to do and get the name out there in a better, bigger way. A lot of companies are reverting back to kind of an old school look, which
Really?
may describe what they're doing. Others are saying, you know what, I mean, we're trying to move into the future, so let's be a little bit more edgy. And again, I mean, it depends on the individual situation, and it's important to really think hard about your brand and know which direction you want to go, and get some help from an outside source. Doing it in a vacuum is going to be problematic. You need friends, you need family, you need maybe some professional help to make it happen.
It's so true, because there are so many people who really have a stake in a company's success, and we don't often think of that as being the powerful network that it is, right? The powerful community of people who are rooting for you and your company and believe in what you do. And they often have great advice and great feedback and insights that you can't really have on your own. I think sometimes it's harder to be objective when it's your own. So I think that's great advice.
Sometimes you can't see the trees from the forest, so you need that outside help. But you also want to make sure you don't have too many cooks in the kitchen, because if you start listening to everybody, you're going to have a brand that really is going to be a little bit messy.
Right. Absolutely. Absolutely. And I think, we've always had the need to stand out. And I think as technology is evolving, it's what I think of as stand out and also stand up to scrutiny. And I think more than ever, we're seeing brands where your brand is your culture is your brand. We know people are out there telling the story of your company, formally and informally, online and offline, whether that's online review sites or with their own family and friends. Everyone is so connected. It's a smaller world all the time. So I think it's really important to take a look at these things. I'm glad companies are.
And Kelly, you made an important point. And that point is that the brand needs to be easy for other people to share. Hopefully, as a business owner or somebody that works in the business, you're able to really understand the ethos of your business, and you're able to give that tight 30-second elevator pitch. But you want to make sure that your advocates are able to do the same thing. And when they present your brand, they're able to say, hey, this is what it is. And the person that they're talking to is able to remember that brand, because
Right.
your brand is your story. And that's sometimes the only thing that makes you very unique.
That's right. Absolutely. Because you're the only one that's got all of the elements, all of the secret sauce, right? That makes your unique
Yeah.
company.
Yeah, there's a lot of banks out there, a lot of mortgage lenders, a lot of digital
Mhm.
marketing agencies, a lot of consultants, a lot of coaches, but the only thing that makes you special is your story, which is going to be the big part of your brand.
Right. I love that. Thank you, Josh.
Hmm.
So, we're going to move to this fairly quickly because we have a really exciting guest with us today. And we have a question from Mark Friedman of Ardmore, Pennsylvania. And Mark wants to know, how can I avoid points when buying a house? And Josh, we really appreciate you stepping in and stepping up to answer this question.
Yep, I am not a lender, but I play one on this webinar. I'm filling in for my good friend Ken Jordan from Freedom Mortgage. So before we jumped on, he and I were chatting about it. And again, the question is, how can I avoid points when buying a house? But I mean, first, let's define points. Mortgage points are fees a buyer pays a mortgage lender to trim the interest rate on a loan, sometimes called buying down the rate. Each point a borrower buys costs 1% of the mortgage amount. So 1 point on a $300,000 mortgage would be $3,000. Now, I think the moral of the story is shop around. These are optional. You don't need them. And a good lender will help you make the right decision based on your particular situation.
You are absolutely right. I get behind that response. Thanks, Josh.
Yeah.
And here's how you can send in your questions to Money Matters TV.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Welcome back. And we are very excited today to have Gary Golden, who is the CEO of BHCU, join us today. Welcome, Gary, to Money Matters. It's nice to have you.
Thank you for having me.
This is a real pleasure. And I need to go right to this one because it is a question I ask a lot. So you've spent a large portion of your career in banking, from what I understand. And I want to know right away, Josh and I were talking about stories. What drew you to a credit union?
Well, I did spend most of my career with some of the larger banks, and kind of ran into a situation where it was just a matter of not feeling like you're making enough of a difference. Mm-hmm. So the credit union drew me because it was an opportunity to make that difference at the community and grassroots levels, an opportunity to build a company that can really make a difference in someone's lives and get to know the people, not just their account numbers. I'm much more interested in relationships as opposed to transactions.
Well, that's music to my ears.
Yeah. So, Gary, I noticed that BHCU's mission is to help members achieve financial independence. How do you define financial independence?
Well, financial independence is basically the ability to count on yourself, be reliant on yourself and not third parties. You have to bet on yourself first, and that's because third parties are notoriously unreliable. If you're relying on the government or somebody else to step in for you when the chips are down, that generally doesn't happen. So you know you can count on yourself. And much like you had said earlier about telling your story and your brand, the same thing goes for individuals. You have to do it for yourself.
So true. That's resonating with me. And I think with many others, especially given the year that we've all just gone through and seen a lot of change. And so then part of the story is the D word, right? Managing debt. So talk to us about debt. How do you think about it? How would you advise someone who is trying to manage that and tell, hopefully, a better financial independence story?
Mhm. Well, the first thing in terms of debt is you can use debt because leverage is helpful in financial planning, but it's all about managing the debt and not overextending or overcommitting. At this time, with everything that's been going on, people are starting to layer on some additional debt, and what they probably should be doing is deleveraging and reducing debt or trying to extinguish it. We do see some of that in the credit card space right now. People are paying down their credit cards, so that's a good thing. But other debts, home equities, mortgages, and things like that are increasing at a pretty rapid rate. And that could be alarming depending on how interest rates go in the future.
Mm-hmm. Absolutely.
Yeah, this is a good question to piggyback on that. I mean, a lot of us have been at home for a better part of a year. And home improvement projects and design projects have become a go-to to kind of keep us out of trouble and keep us occupied. And since we're spending so much time at home, let's improve our homes. So a lot of stores, Home Depot, one of them, Lowe's, have credit cards and lines of credit that make paying debt easier. But when you read the fine print, those interest rates are kind of through the roof. What advice do you give the community members who have found themselves managing this debt, and is consolidation ever a good idea?
Okay, so my first piece of advice around here is from a money management perspective. If you don't have the cash to pay for something and you can't make it work unless you have interest-free financing or some other kind of extended terms, you might want to rethink the purchase. Running that close to the edge sets you up for a problem later when something unexpected comes up or some unexpected expense, which always happens, it seems, right? So then you start becoming late on your payments or you miss a deadline and it has an impact on your credit score. And now that that's gone down, any kind of future borrowings, car loans, personal loans, mortgages, they all charge higher rates for lower credit scores. And you may not realize that at the time, or you think, well, it's just a half a point here or a half a point there. But a half a point on a kind of typical mortgage could change your monthly payment $60, $70 a month. Over the life of the loan, that's tens of thousands of dollars that you would have spent unnecessarily. And it's tens of thousands of dollars you could have set aside for maybe something like retirement.
Mm-hmm. I remember you're just making me think my first mortgage rate a while ago was 9 or 10%, I think, when I got my first mortgage. And like truly, there's a whole generation of home purchasers, mortgage holders now who don't know that time, right? But it really does drastically alter what you can afford going forward. So that's just my little editorial there.
Very much so. My first mortgage was 10 and a half. It was an adjustable, and I was very happy to get it.
Right. So it really does make a difference. And I like what you're sharing with us. I've noticed recently, like Josh said, we're all home. So that also makes me think people might be using home improvement loans to add a second office because maybe they didn't know they were going to be working from home permanently or refurbish something. I've also been doing some online shopping since I hadn't been going out, and I was starting to notice that there are a lot of like payment plans for what I kind of consider some smaller purchases, a candle for $14.99, 4 easy payments. So topic for another day, but I think it kind of ties into some of this. And I really appreciate what you're sharing with our audience around evaluating what purchases to make and what to take on. So do you give career advice, Gary, to people who maybe are starting out in the industry?
I get that question a lot, and I've had the opportunity to work with a lot of interns and recent college graduates. So for sure, and that comes with not only career advice but also money management early on. And the thing that I stress constantly is start the savings plan as soon as you start that job, and stay with it. most employers today, even the smaller ones, offer some kind of 401k plan or something like that. And you need to take advantage of that. A lot of them offer matching contributions, and that's just free money. So if you're not participating in that, you're really missing out. And do it from the beginning. Carve out a little bit of that money early from your paycheck. You won't even feel it, and just be consistent with it. That initial savings plan doesn't have to be huge. It just has to be consistent. Time and discipline will do the rest. And the other piece of advice that you give a lot of the younger people just starting out is ignore unsolicited credit card offers, because that's where you get into trouble. Right? Mm-hmm. So particularly in today's world where instant gratification is everything. Mm-hmm. One of the most popular, sites, I guess, is Instagram, right? We're just constantly reinforced. You can get anything you want. Amazon and all these companies, hey, we can have it on your doorstep tomorrow. Right. It's just this instant gratification. So, and people that haven't been through enough economic cycles think that's just the way it is. Well, there's a cost to that. And these programs where they can say, hey, you can finance, as you said, your $15 purchase or thing. There's a reason for that. No one's doing that for free. Right? There's another side of that. Somebody's motivated to do that because it makes them money. Right. So you have to think through those things, and really, getting into a lot of debt early is something that's really hard to overcome.
I'll mix some metaphors. It almost starts out you're building a very fragile house of cards that can become really like cement boots over the long term, right? Indeed. It all seems very easy to get into.
Thinking back to colleges, like I used to get a lot of free beach towels and Yeti coolers and all sorts of things just for signing my name and getting a credit card. Right. And thinking back, that was they knew their audience, and they were able to get a lot of people to buy in. And to your point about putting money into a 401k, I'm a little odd. I stayed at my first job for about 7 years, and I maxed out my 401k and got the free matching money. When I left that place, I walked away with a check that was the largest check I've ever seen. And obviously I rolled that over into another 401k, but that created a great nest egg for where I am today.
Sure.
That's awesome.
Yeah. So, Gary, government stimulus payments and expanded unemployment benefits are changing people's financial behavior. What advice is BHCU giving to your members on post-pandemic spending and savings?
So the basic fundamentals and objectives of saving don't change regardless of the external environment. You need a plan, you need to stick with it, you need that discipline. But my advice around the current state of affairs is do not get lulled into a false sense of security because you've gotten some government stimulus money or maybe some expanded unemployment benefits or something like that. You absolutely cannot rely on the government or anyone else to save you. Financial independence is only realized by relying on yourself. And there has to be some personal accountability here too. But I can tell you, I've been in banking for over 35 years. I've met a lot of very wealthy and financially comfortable people. And not one of them ever got there based on government assistance, stimulus money, unemployment money, or anything like that. I've yet to meet a single person who has had their standard of living raised at all by collecting government handouts or anything like that, let alone achieve financial independence. So it's just not possible. So it seems like a nice perk to get a $600 or $1,200 check all of a sudden, but that money's going to be burned through pretty quickly, and it's not going to be there when you need it down the line. And don't count on somebody else taking care of you.
Understood. So what are some realistic goals then for this next year or two for someone who's trying to get back on their feet post-pandemic, somebody who maybe is working a 40-hour-a-week job earning less than $12 an hour? Like, is there a range? Is the advice the same, or are there different things that people can do?
So I tell you, the advice is very similar to the advice I would give someone just starting out, because they too tend to be making less money when you first start out. So start small. Again, a productive savings plan doesn't need to be huge. It just needs to be consistent, and time and that consistency will do the rest. So it's all about paying yourself first, putting a little bit aside, and let time do its thing.
Got it. So I think you just answered this a few different ways, but I'll give you another opportunity to see if you can answer it again. What is the best piece of advice you've ever been given that has helped you focus on gaining financial independence?
That's pretty easy. It's 3 simple words, and it's save your money. It's because that's really what it comes down to. And there's a lot of ways you can save your money. There's different accounts you can have, and there's different diversification that you can have when you start to accumulate that money. But pay yourself first and save your money, and the rest will take care of itself. It seems very simple, but there is no magic pixie dust here for this. Planning for retirement or anything like that has to start early and be consistent. And if you do those 2 things, you'd be amazed at what you'll end up with at the end. Because I can tell you, I'm a lot closer to retirement now than I was, and I can start to see what's on the horizon, and it gets here pretty quick. And I talk to young people today, and they think, "Oh, I want to retire when I'm 50 or 55." Well, I hope you're prepared to pay the bills for the next 45 years. Because that's about what it might take, So, not planning to live that long is not a good plan. So, and you'd be the cost of getting old in our society is pretty high. So, it's very, very important to plan and use time as an ally. And if you start late, time becomes the enemy, not the ally.
So true. So true. Now I know, Gary, you don't have a crystal ball. I don't think anyway, right?
Nope.
So I don't want to put you on the spot here too much, right? But there are new things that are coming into the markets and investments, whether that's cryptocurrency. I heard something the other day about a non-fungible token, and I don't even know, is that the same thing as cryptocurrency? So I guess my question then is, how can people investigate these things? What's the best way for them to make sense? Or are there things that their bank or the credit union can be doing to help them make sense of these kind of external changes that seem fairly significant to the layperson over here?
So a lot of those things that you hear about, I would tread with a lot of caution. So most of your banks and credit unions are not typically involved in Bitcoin, cryptocurrency, or NFTs,
right?
As you say. And to be honest with you, I've been in bank, as I said, for over 35 years. I don't know that I can explain why a NFT has any value at all, other than emotion of a buyer and a seller, right? So, and things that are driven solely on emotion make me a little bit nervous. So I would suggest, if you're really interested in getting into that, keep one thing in mind. You hear about it because you hear about those crazy stories of success and the unbelievable wealth and the 25-year-old billionaires and things. So yes, I guess it exists. But what you're not hearing is the other million 25-year-olds that are slaving at that minimum wage job, that are not doing that, or invested all their money that they did have in that and they lost it.
Right.
Sometimes it seems like the end goal of all Bitcoin and cryptocurrency is to have your stuff stolen. So, I'm not sure that that's the right play. It's not something that I would actively give a lot of advice on, other than if you really want to play, do it with money that you can afford to lose.
Afford to lose. I
This
love
would
that
not,
advice.
you're going to the casino here,
Mhm.
right? So if you want to do that, by all means, for entertainment value, go for it, but make sure it's money you can afford to lose.
Right. Makes a lot of sense. Makes a lot of sense.
Gary, we're located, I think, nearby you. We're right in Delaware County in Prospect
Yep.
Park. You want to just talk a little bit about BHCU and your footprint and how it all works together?
Sure. So BHCU County, so that anyone that lives, works, worships, goes to school, or anything like that in Delaware County can become a member. So we operate much like a community bank in that sense, but we're very Delco focused. We have two offices, one in Ridley Park and one in Glen Mills, actively looking for additional offices to serve our membership. And that seems to be the oddball thing nowadays because everyone's going the other way. They're reducing branch footprint, right? And everybody's pushing you online. And we certainly have all of those. We have a very cool mobile app, and you never have to come into the branch to see us, but we hope you do. And the reason that I'm looking for more of those interactions, as I started this segment with, I'm much more interested in relationships than transactions. So I think at the end of the day, that is going to win out, despite what's going on in the marketplace today. Yes, you have to give people a self-serve option, but the business that we're in isn't just financial services. It's actually being there for them, for our members. And I think that's the long-term play that will make us much more successful. There's a reason none of our offices have drive-throughs, because we want to see it.
Right. And it's a professionally intimate service. And there are other companies that are in that position as well. And I think that to have the flexibility when, for on the more like transactional related stuff is great. But then there are times, and there are generally times when people are looking for solutions, or they're in some type of a stressful situation that they need to have that human contact as well. So I'm glad that it's a priority.
I mean, everyone's heard the phrase that, hey, it's not personal, it's just business.
Right.
And I really think when it comes to money matters, that needs to be flipped. It is personal.
Right.
There's very few things that are more personal to people than their household finances. Nobody walks around the town with their salary painted on their chests or an index card on their forehead saying how much money they make, because it's personal to them.
Right.
So if we're on the other side of that, if we're the steward of their deposits and trying to guide them with how to manage debt or investments, then we need to understand that it is very personal.
Right. Absolutely. So in the minute that we have left, I wanted to ask you a question. What are your wishes for the future of banking? Like, do you have something that you're just like, wow, if I could wave a magic wand, this is what I would love to see happen?
Well, that's a great question. I think I would like to see it not lose the personal touch. That's probably what I'm most concerned about. Because as you get disconnected, it just becomes a field day for potential fraud, for a lot of misrepresentation. There are a lot of productive things you can do online. I use my online banking portal all the time. I pay bills electronically and things like that. But if that was exclusive and that was the only thing, I don't know that I have quite the comfort level. I think it's important to still be able to meet face to face, and touch somebody. I mean, I know that's hard in the middle of a pandemic, right? It's hard to be in the business of shaking hands when you can't shake hands.
Right.
But at the end of the day, I'm really concerned about losing the personal touch and the fact that people can hide behind things online, and they can hide from them. They hide themselves, right? You don't even know who you're dealing with.
Right.
And I think that's that's going to be an ongoing problem.
I love that. Thank you for sharing that, Gary. Thank you so much, Gary Golden, for being on our show today. And to be joined by Josh Irons was wonderful. Next week's guest is Doug Hepburn, and he's with Hepburn Financial Advisors. We hope you enjoyed this show, and we look forward to seeing you next time. Thanks very much.